So now we're going to get into our oscillators and teach you a little bit, which might be redundant for some of you, but I want to go through, especially if you are looking at how to clean up and utilize indicators, because there's certain nuances in this course, and I definitely got to tell you, you need to go over this course every week for the first month. At least plop the CD in, go through these things, fast forward through the viewfinder, and you can go through the CD and re-heighten your education as to the patterns, and then go back and back test these methodologies yourself. Using the stochastics, and I'm impartial to stochastics, it's a momentum oscillator pretty much. It's also called a range-based oscillator. One of the things about that is that most people think that when the market's under 20%, they go long. When it's over 80%, they go short. In a trending market condition, stochastics will kill you. But more importantly, if you know these rules right here, it doesn't matter what market condition the market's in. These rules here will keep you out of trouble. Now, what's important is understanding the rules of how to interpret buy or sell signals. When the readings in stochastics, and I use a fast stochastics, a 14 period with a 3 period average, when the readings are above 80%, once %K and %D both cross over and are pointing down, a hook sell signal is generated. But we need to wait for the market to close, and we need these values to close, cross, and confirm and lock in once they are below 80%. That's the key. You want to wait for stochastics K and D to hook, cross, and close below the 80% line. And that'll help generate a sell signal. Now, for a buy signal, you want to wait for %K and D when the reading is below 20% to both point up, cross back through each other, and the hook buy signal is generated once both values cross and close and lock in above that 20% line. At times it might be 25%, so be a little bit flexible there. But if they are under 20 and they lock and close over 20, so once again, let me repeat, if they're under 20 and then cross and lock and close above 20, that generates a buy signal. Now, using stochastics works very well in trading range-bound markets, especially when they're stuck in these channels that you can day trade out of. So once again, the market, it's up near its high. It's above 80. Market closes back beneath the 80 line, generating a sell. The market comes back, bounces, goes under 20, closes back over, comes back up. And so you can trade this market back and forth in trading ranges. But when the market closes and crosses back above that 20% line, friends, believe me, and you have what? Another high closed doji. We had a doji here, but we didn't have a high closed doji. In fact, we have a doji here, doesn't close higher, it closes higher there, and does it not look at closing above what? All these highs and these dojis, and you're in a stochastics hook buy mode? Buy signal. Applying your stop risk mechanism and what to follow. We see a red candle appear. Does that scare you? It shouldn't. Why? Because the market's at a pause. What scares me is once the market starts to close closer to its lows, away from the high, and we start to see lower closing lows, I'm out of the trade regardless. If you bought in on a higher closed doji, if you bought in on a high closed breakout, if you bought in on that stochastics, you're in from 129.30, you're out at 129.71. That's a 41 pip move, and look how much time you were in that trade. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 70 minutes. Not a bad trade. Now, just to let you know, there's fast stochastics and slow stochastics. I already let the cat out of the bag. I like to use fast stochastics with a 14-3 setting. The reason is I like a smaller time periods, which have the smaller that the parameters are set for any indicator, that gives you a measure of the change in price, and it's referred to the gauge and sensitivity. The larger the time periods, the less sensitive the indicator is, the fewer signals it will generate. Since I'm a momentum trader and a foreign currency trader, by all means, you are a momentum trader. You are a